Hey, it's Andreas, and let's reflect on the earnings report for Palantir here for the first quarter of 2022. Now, for the quarter, revenue grew by 30.8% compared to the same quarter last year, and this is acceptable. It's not great, but it's acceptable. Earnings was disappointing. However, in my opinion, the big bear catalyst that causes the nosedive of share price that we saw this Monday was future guiding. Now, Palantir guided for only 25% growth for the second quarter. Say what you want about, being cautious. Maybe they know something we don't know about the future outlook of the economy. However, this is not good. This is certainly not what Wall Street wants to hear. It's not what I want to hear either. Now, I want to give you guys some quick insight here and share some calculations on why revenue growth is so important. And I included the total market cap of Palantir here for reference as well. You can see that total market cap is 14.5 billion, so US dollars. And to justify this price, we need to see growth. Now, previously, management have stated that they have a long-term goal of 30% on a year-over-year basis. And if we calculate for this using the total revenue of 2021 here of 0.43 something billion, and then take an outlook into the future, calculating for 30% revenue growth, then by the year 2030, the Palantir will have revenue of about 4.5 billion. All right, and the growth that I want to see, 40%, if we run the same calculation here and take a look at the year 2030 with revenues growing compounded on a year-over-year basis, well, then revenue will be almost double that of the 30% growth rate. It will be 9 billion. And compare this to today's market cap, then, well, you're not paying that big of a price for the company if they have 40% revenue growth. However, in 30% revenue growth, then the valuation is not looking as attractive, obviously. Taking this even further, 10 more years to 2040, we can see 63 billion here in revenue with 30% revenue growth, and more than 250 billion with the 40%. So you can see why the growth rate is so important for the price we pay per share. And I really hope that Palantir is able to stick to the 40% year-over-year growth track and not the 30%, and certainly not the one that they guided for Q2, even though they stuck to their 30% year-over-year growth rate for the full year of this year. Then this is still alarming for investors. Anyways, that was some quick insights, some reflections on the earnings. I hope you guys make a ton of money, whatever investments you decide to do. All right, take care now. Bye bye.